Well, in a rare occasion, we are late for the first time for a PUG meeting by 2 whole minutes, and my sincere apologies there. Thank you all for, General John, good to see you. Thank you very much. Bonnie, hello again. Today's event, welcome everybody. Thank you for joining us. And PUG meetings are generally designed to give you guys some insights on how to use Person's indicator and any of my indicators. Generally, we've had opportunity to share with you using, well, a slew of products, which are Trade Navigator, Genesis, TradeStation, HGSI software, as well as Thinkorswim. We have a few questions from some novice traders, which I think were pretty important. And actually, it's only because I enticed them to open up accounts. So and get started. So we have some newbies, brand new newbies. We have a Jonathan and we have a Stephen. So Stephen F. and Jonathan, they may not be in the room right now, but you know I'm calling your name out because you'll be watching this video, I'm pretty sure. Both are brand new to both. One never traded anything before, mid-30s, Jonathan, and the other, Stephen, has had his own business, and they've got their own thing and retirement planning, but never got into doing it on his own, which there's always that danger that you throw money in and you start doing things that you don't want to, like trading all the time and getting in and getting out. And it's easy access to point and click and getting into trouble in this industry. That's for sure. Patience is the secret to this industry. I think patience and the discipline to enact patience, knowing, I don't want to sound obscure, or not obscure is the wrong word. I don't want to sound like I'm throwing out a cliche, but know when to fold them, know when to hold them, know when to sit on your hands. SOH is a trade, sitting on hands. Today we had kind of that, and it goes within that theme and of sitting on hands. As the Fed announcement was coming out, it looked like we were going to get a dump and then a pump. And then, we were really sitting for the most part today at a threshold that would have reversed the market with the daily buy signal and an uptick in the advanced decline, which was kind of strange ahead of the Fed day. But as Jay Powell started to speak and the market started to sink in, wait a minute, this guy's, he's gonna just, I don't want to say cut off the financial party head, but he's going to cut he is and will continue to raise rates. They're data dependent. The only thing between now and the next rate hike, if we get our calendar out, besides, and I want to take this opportunity to wish all my Jewish friends out there a happy new year, which I believe starts sundown Sunday night. I believe it is, right? So we got that going for us. So they say buy on Rosh Hashanah and sell on Yom Kippur. I'm not sure if that's going to be this year, because the weird part about that, it is the last week of September, and usually it's a little earlier. But be that as it may, the only thing that's going to stop the market or any economic data that is going to come out that says, hey, Fed chairman, listen, knock, knock. There's evidence of a slowdown, or at least to the market participants, is going to be next Thursday's GDP and PCE number. Core inflation. It's all about inflation and softening economic numbers. Forget about softening economic numbers. I just want to make sure we all heard the same thing today. And that's why I do take the time, and I stress this. It's not just about trading and using indicators, but it's also taking advantage of the tools around you to become your own decision maker. If I sound nasally, please forgive me. I am, and I may have to turn the mic off from time to time, which would be kind of a problem in case I sneeze or choke to death by coughing. So we don't want to do that. So I'm going to talk a little softly today, and I'm going to talk a lot slower, so not to get too trigger a cough there in the mic. Because when we turn the mic off, what would happen is, or we turn the recording off, then recordings don't work, and that's no bueno for those that would come back and listen. All right, let's get into it today. The topic today is a few items on Thinkorswim, which I think are apropos. But before we begin, please take a moment to read through this risk disclosure. Trading involves a risk of loss. And with that said, here's Thinkorswim. And quite frankly, some of you will say, but if you're in the live trading room, and basically I'm just doing twice, I'm doing the same thing twice. And what we have normally, what I like to look at is, and you'll see almost everything. Well, quite frankly, these are all John Person indicators with a few choice trend lines. And in the case of Charles Schwab, for example, green would indicate our price level of which we went long or bought a dip on, and orange is now the trailing stop, which you'll see orange is above green. In the case of Occidental, a red line, we were looking for this, I call it the red matter. If the market could get a daily close below that red line in the sand, it should open the door for lower prices. So we finally got a daily close below that 63 number today. And that's a positive thing for our current position, because we have the October 21st expiration, 57.5 puts on, which was an initial design strategy as a diagonal calendar. We thought the market might go down, but might need a lot more time. And rather than buying outright option premium with that much theta, we did a diagonal calendar. We sold the, I believe at the time it was the September 52.5 strike puts, and then went long the Oct 21st 57.5 strike. So further out in time, higher strike, less time, deeper out of the money. And we've bought back, as the market rallied, we bought back the lesser time, deeper out of the money put for next to nothing. And that helped offset our net cost on a directional trade to the downside in Oxy. So I just thought I'd explain to you what you're seeing on the chart. So in the case of Occidental, and we'll take good news and we'll take bad news, good trades, bad trades. I think it's important to look at everything. If you look at the structural change, first thing when I'm swing trading, and swing trading or short-term trading, 10 days, 2 weeks. And in this market environment, 10 days, 2 weeks seems to be a, I don't know, lifetime for stock trading, because we really haven't gotten any meaningful trends except for, of course, energy this year, which has been kind of rough and rocky. So you'll notice these heavier lines, and everything is labeled upstairs, meaning right up in here. So we have daily, if you're not familiar, this is Person's pivots, the daily pivot points with weekly pivot points. And then you have this other big line here, this aqua line, and that's called monthly pivots. So I'm looking at 3 different time frames. And, you know, mathematically, many of you are familiar with Person's pivots or pivot point analysis. It's based off a mathematical formula. And why are they important? If you'll notice, we don't have really support and resistance. What I'm looking at is short-term daily, weekly, and monthly pivot point relationships. If a market's bullish, and this is something we teach in our seminars, all my class structures, every one of my books, I believe Candlesticks, Pivot Point Trading Triggers, I could grab a copy off the shelf. It's probably, I used to remember the page number off the top of my head, but it's been so long. In a bullish environment, the pivot point, markets generally trade north or trade above the pivot. And the pivot is defined by the high-low close divided by 3. So if you're a day trader, you want to make sure if you're bullish the market, you're either ripping up from support and you have good inclinations of either momentum of volume, momentum of some type of higher high, higher low structure of price to get you going with the right side of the market. If it's a little bit more than that, like a swing trade, if the market's truly bullish, a couple things might happen. First off, we should be trading greater than the weekly pivot point. When you start to change, and you'll notice here, and this is a really good insights for you guys, if you go over to studies on Thinkorswim and you go to add a study and you find John Person's indicators, And I do this a lot, almost every PUG meeting. But if you go to John Person's indicator and you go up to Person's pivots, you add Person's pivots. When you do that, it defaults to daily pivots. And so if you go to a daily chart, and if this is the same thing that we did a week ago or a month ago, or I'm going to not get too heavily in on this because we have other things to discuss, and you can obviously see different videos that will reflect what we're talking about. If you go to a daily chart with daily pivots, you kind of look at, like, I don't know, a bunch of squiggly lines. Most people don't know what they mean. So if you want to change, if you have a daily chart and you're looking for a swing trade, if you're looking for a trend trade, maybe a trade that you might be in a month to 2 weeks to 3 months, for example, you'd probably want to change your study and not use daily pivots. So you would go to edit studies, and I just added the pivots, and we already had them on there, but it would be the daily, and you would just go over to the cog wheel and change day, drop down, and that's where you find the menu to change whatever selected time frame you want. Quarterly is not any 3 months. It's a financial quarter. So this was calculated by looking at a financial quarter: January, February, March, Q1, April, May, June, Q2, July, August, September. 9 days from now, boom, quarter's done. So quarterly pivots, we will recalibrate in 9 days for the fourth quarter outlook, right? Option expiration. A lot of stocks pin or migrate around their option expiration calendar, which is about 4 weeks. The difference is it's not a calendar month per se. It's an option expiration month, which expires usually the third Friday of each month. So you have option expiration. I tend to use option expiration on stocks that are heavily optionable or have great volume on options. A Tesla would be an example. An Apple would be an example. Hess, which is an energy company, not so good because there's not a whole lot of option volume or open interest. So for other markets that do not have a whole lot of volume in the options, I use your calendar monthly option expiration dates. We have weekly. Now, Thinkorswim, when they do something in the old days under Tom's direction, Tom Sosnoff, the founder, creator, along with a bunch of other guys that helped out, Q, for example, Steve Quirk and JJ Kinahan and the likes. Frankie Walsh, shouldn't rattle out Frankie's name, but anyway, all right. But Frankie and all these guys that got together to input, that when they did something, man, they just threw steroids on it. It's like, okay, so 4 days. There's no purpose for 4-day pivots, but they felt, why not try it? And so 3 days. There is a value for 2 days. In the last PUG meeting we had, we did a big study about 2 days and when to use them, when to apply them. I'm not going to get into it today because it was on the last PUG meeting. So please reference the last video on the PUG meeting. And then daily. So if you do not want daily pivots and you want to get rid of all these, like, dots, then either change the day to a week or a month, or change your time frame from a daily and drop it down to an intra-time period, like an hour. So by daily pivots, Person's pivots just does one thing. It does several things, actually. That's not true. It gives you the trend direction of the market, bullish or bearish, and it'll project a lower high, lower low type of analysis. Now, we have several different color codes here, but you'll notice that the red line, if you follow my direction here, the red line was today's daily pivot resistance in Oxy, and the green line was the projected support. It was inside the high from yesterday and above the prior day's low, so pretty much neutral. But as of today's close, look what it did. It dropped down already, telling you that it told you on today's close, or as the market was closing, it was already calibrating and calculating, taking into consideration the daily high, the potential low, and wherever it would close. It was already sharing with you a lower high and a lower low. So tomorrow's green support, because tomorrow hasn't happened yet, It's giving you a leading indication that the market is directing us to a bearish outlook tomorrow price-wise, with resistance at 64 64 looks like 94 and 60.01 for support. So it's giving a lower high, lower low projection. And so if the market is truly bullish, if it reverses and it's not bearish, again, let's say the pivots today say the market's supposed to be bearish for tomorrow. Tomorrow we come in the day and it opens higher and all of a sudden it trades. And the first hour of trading is trading above the daily pivot, which is this fuchsia color right here. If the market's supposed to be bearish, it shouldn't be trading above pivot. That means something has changed overnight. The dynamics of price structures changed, and the market is now completely reversing that prognostication. In a very bearish market environment, what tends to happen is the markets trade below the fuchsia number, the fuchsia on a daily basis. And so that's probably one of the biggest helps for anyone. Now, you can take that theory or that thought process or that logic and do the same thing on a weekly basis and on a monthly basis and on a quarterly basis. If the market is truly bullish for the month, we should be trading above the monthly pivot. So in using Person's pivots, it's not just designed to give us the support and resistance, it's also designed to give us the target directional condition of the market. And that's one of its best values. Not the predictive power of the highs and the low, but the predictive power of what the trend condition is. So for the energy complex, there's or for any particular stock, there's another what's behind when you go to studies and you look at John Person, go to add a study and you look at John Person's indicators. We've just disclosed to you what the Person's pivot is. The next one is this thing called PPS. PPS is a specific momentum indicator, and that's the moving averages that you see overlaid on the price and these arrows. These arrows predict, or not predict, but they identify momentum changes in the market. A blue arrow pointing up indicates the momentum is positive. Thus, maybe one would look at a buy signal, and an arrow, orange arrow pointing down would indicate selling pressure. And so that is the PPS buy and sell. Now, what's neat about the PPS buy and sell is if you go over here to your scan on Thinkorswim, you drop down on a study menu. And if you go to license study and you click on buy or sell, PPS buy or sell, you can definitively find out how many buy and sell signals were generated. And so for today, because I haven't done it yet, so I thought it would be interesting. Let's take a look at the NASDAQ 100. And then you have over here at the your time filter table, you have D is already selected. You could change this for 1 minute, 2 hour, 4 hour, daily, weekly, monthly, option expiration. Show me how many buy signals at the end of the quarter or buy signals on a yearly basis are generated. I've never used yearly buy signals because there's too much dynamic changes and seasonalities. So therefore, it's not something that I would apply for short-term trading. What I do, though, and what I find extremely useful is to, on an intraday basis, rather than looking at how strong or how weak is the market, we have several tools for that. One would be advanced decline analysis. More stocks up relative to stocks being down, it's more positive. And the more that trend over time has continued, meaning yesterday the advanced decline was up, the day before the advanced decline showed more advancers higher than decliners, more stocks that are positive over time, the stronger the market condition. When conditions change, you're going to start to see something unusual. Yeah, a lot of stocks go down and you see net changes and everything's in the red, meaning the stock went down. But if it changes to the point where it generates a daily sell signal, that's important. A day that the market price of a stock might be negative or down might not necessarily give a sell signal. And that That, my friends, is something that's intriguing. So let's run the scan for today at the end of the day. And quite frankly, it's interesting. Even though Starbucks, I was just saying that Starbucks, it's generated a daily sell signal today, and Regeneron also generated a daily sell signal. So on a day like today where the market was down, one thing I would find out, what's the opposite of down? Up. So maybe we look to find out, were there any in this activity today in the market with its disastrous close in the market? Did we generate any new fresh daily buy signals? And as you can see, no matching results. Earlier today, we were doing an intraday scan, and this is very important for anyone taking a look at the market. If you're trying to get, in fact, empirical information that is the market really weak, and if it is, then you shouldn't get any buy signals. On an intraday basis, on a given day, not a Fed FOMC day, especially not on an FOMC press conference day, if the market is down and all of a sudden we're starting to flash more daily buy signals, it's kind of a false breakdown. And I would be looking for those daily buy signals. And I mean, what is define a buy signal? The PPS buy signal. And on a day like today, if we could find a buy signal, I would say that would be interesting. As it is right now, we got no buy signals. In fact, most of the things that were warning us of buy signals disappeared. So they were crossing a threshold of generating a buy signal, and the prices pulled back. And so an algorithmic formula did not trigger a buy signal. In fact, we didn't even get 2-hour buy signals. We didn't even get 1-hour buy signals that I'm aware of. Let's find out. No matching results. So today negated what could have been, and earlier today we had a few stocks that were starting to generate some buy signals. Had everything been hunky-dory, and if Jay Powell wasn't as hawkish and said, listen, we're going to see unemployment get up to 4.5 maybe. And I don't know if what the Federal Reserve, if maybe that's the problem in the market. A year ago, not a single Fed member said that they were looking at even thinking about raising interest rates. And now all of a sudden, here we are at a over 3.5% Fed funds rate. And they're targeting another maybe full point higher from here. So maybe at the end of this year, we could be at 4.5% on the Fed funds target. We don't know, because Jay Powell really doesn't know, because Jay Powell didn't know last year. And so I think when Jay Powell says, yeah, we might see more pain, he really doesn't know. And he said in today's press conference, he reiterated 2%, 2%, 2%. He said it in the announcement at 2 o'clock. The Fed released their announcement at 2 o'clock, and then he sat at the press conference. 2% inflation. So unless something really dynamically changes in this world, the Fed is on path to raise rates more aggressively until they get the inflation rate down to 2%. As you all know from the media, we had a number of, I think, 8.3%, which sent this market in a tailspin since last week. 8.3%. All right, but we see a lot of stuff cooling down and all of that. And we see commodity prices down, and we see housing prices down, we see mortgage rates up, and we get that. But you know what? The market was really looking forward to hearing, hey, you know what? And it's a midterm election coming up, even myself. I don't know if the Fed wants to be apolitical and start crashing an economy ahead of a midterm election, but as it seems, their mandate is to really get inflation down, and not I want to point fingers at anyone, but nowhere have we heard from the Fed officials saying, you know what, our lax policies, and because we were so late to the party and we did get this transitory thing wrong, now he's all about helping the people out because inflation is even worse than rising rates and that nonsense. So the moral of the story is that today's activity it kind of like took time. There was a delayed reaction, and it took time for the market participants to really maybe understand this. And I think that's what's going to cause, and maybe what helped to technically dissipate all the, there are no buy signals. So if you want to not understand it, if you don't understand anything that I said about the Federal Reserve and didn't know anything about a meeting, only thing you have to understand is, were there any new buy signals today? None. That's not generally bullish. Were there any new sell signals today? In the NASDAQ 100, 3 names, Regeneron and Starbucks and Dexcom. So I'm going to take a look real quick with you, and we're going to take a look at SBUX together, and then we'll throw things up as to the theory first about Person's pivots, and then I'll explain the next 2 indicators. So we have Person's pivots. You can see that the red and this red and that red and the green, and you can start to see the fuchsia number here, which is the Person's pivots. If the market is truly bearish, the market is going to trade what? Below the pink line, the fuchsia. If the market's bullish, it trades above the pink line. So from a day trader's perspective, when the market, especially after the first hour or hour and a half, is trading below pivot, you know, your odds of success of trading the short side of that market as a day trader are greatly enhanced. When the market's trading back above the pivot, and in the live trading room today, many of you heard me say, hey, Jay Powell's talking, you know, the market dumped. I would not take buy signals unless we get trading above the daily pivot today. And we really had a hard time getting above daily pivot today in the ES, as many of you are aware. And then it started to get some major traction in that last hour. But here's Starbucks. And what's interesting is, whether it's E-mini S&Ps, whether it's Starbucks, whether it's AMD, doesn't matter. Technically speaking, if a market's supposed to be bullish, it should trade back above its pivot, the fuchsia line in this case, on a daily basis. If it trades below pivot, you don't want to really be a buyer. You want to look for buy signals when the market's trading north of pivot. Now, here's the 1 hour chart. And this is very important. Is you see the market opens higher, trades around, and then after the first hour closes right back down. And that's all the red candle signifies, the open-close relationship. A red candle means that the close is less than the open. This is the open, and that's the close. And in this case, notice where the market closed below pivot. So now the pivot, even today, was Starbucks. The market never traded, literally, not even on a 60-minute closing basis could it trade north above the daily pivot. It's a bearish outlook. So what's happened that the market has now given us an intraday, or now a end of day sell signal. There's your arrow right there. If you can't see it, go to studies, hit edit studies. Let's go to PPS, hit the cogwheel. Let's go to sell signal. The width is 1. Change it to, well, we'll change it to 4. The buy signal, we'll change that to 4. And that should make it big and bold for us. Hit apply and OK, and there's your arrow. So you had a buy signal back on September 7th in Starbucks. And notice what's interesting about this. It traded north of the fuchsia line. It traded above, which is the daily pivot. And then the blue line is just a higher time frame weekly pivot. Now, not a single day since that buy signal was generated did we trade above pivot until then. And then we got a nice little mini trend to the upside. Today, we have a pretty much a negative reversal. We have a daily PPS sell signal. We close below the daily pivot, no bueno. For tomorrow, it's projecting a negative outlook. And most importantly, for higher time frame analysis, it closed below the weekly pivot. And that's why I have daily and weekly pivot analysis on my charts. The higher the time frame pivot, the more important or longer duration a trend might last. In other words, if it closes below the daily pivot, it might be 1 or 2 days. If it closes below the weekly pivot, it could be 3 or 4 days, the rest of the week. If it closes below the monthly pivot, that's a different story. And that might give us a bigger change of heart. So we have a daily sell signal. And the only reason I came up with picking on Starbucks is I just ran it straight with you. I had no inclinations of targeting Starbucks for any other reason other than it showed up in the scans using the PPS indicator. That's it. But I think it's a good example of how I use technical analysis not to give me an opinion, but rather give me directional trend facts. And the fact is, if the market is truly bullish, we should be, well, besides an uptrend, we should also be trading north above pivots supports. We should be trading north above these pivot supports. When you start to trade back down beneath the pivot supports, that's no bueno, no good. And so Starbucks, whether or not it might come in a little bit more like 86, 85, where is it going to stop from there? We'll take it one day at a time. But as it is right now, this traded below its respected weekly pivots. And it's also two other items that we have here. This is a tool that's called on balance volume. This is not my tool. Joe Granville created this, and it gives us a tracking mechanism of the trend of volume. So without getting into much ado, if the market is truly bullish and going up, we would want to see corresponding volume trend go up. So that gives you an odds that, hey, that buy signal, that PPS buy signal, and the market's greater than its pivot, hey, that's not a bad combination. The odds are we might get a little bit more directional upside out of the stock. When things start to turn north, and then finally, as today we're given a weird negative outlook coming into today. Today, remember, today the market was generating a lower high and targeting a lower low. And unfortunately, the market, if you're bullish, it followed through with that. So Person's Pivots is designed twofold to help traders stay focused on the condition of the market from a mathematical standpoint and a weighted standpoint of value. How do I say weighted standpoint of value? If you take the high, the low, the close, add it up, divided by 3, you get a midpoint. That's your pivot analysis. That's your midpoint of value. And if a market is going to improve in value, it should be back above a midpoint, not below the midpoint. So that's where that factual value comes from and why I utilize this so much. The third, besides the Person's Pivots, the PPS, the third tool that's under my name, though, if we go to add study, you see John Person's indicators, this thing called PMC. PMC is a relative strength indicator, and it's this bottom one down here in a histogram format. And it does several things for us. First and foremost, it gives us a zero line crossover, and you probably could figure it out by looking at the colors and the graph of the chart. If a market is making a newer high or rising, and at the same location that the stock price is going up from a preceding high, and the relative strength is weakening, meaning the current bar's movement is less than a prior bar's high, that's called a divergent of relative strength. When it starts to turn red, as I'll highlight here, as it starts to turn red, it's indicating it's losing its appeal or its relative value to the S&P 500. It's weakening. If you're buying a stock and it's below pivot and it's got a daily PPS sell signal and the relative strength is going red on you, and you still want to buy that stock, take a day off from the office or buy a defined risk option strategy that's not going to cost you your left arm and your big toe. Because when you get into a combination where you get a sell signal below pivot and the relative strength starts to weaken, it's showing that there is a determining weakening trend occurring. And I just wanted to point out that the relative strength PMC tool, it does several things. It gives us, without getting into a seminar lecture here, what it gives us is 4 condition stages of a market. It gives us underperforming, it gives us improving, and it gives us outperformance. So if a stock is going to bottom out, when it finally starts to bottom out, the relative strength starts to improve by getting less negative. And then more importantly, it does something unique. It turns the color code changes to bright blue. So again, two things would be occurring if you're bullish the market. The relative strength starts to improve, and then prices start to trade north of the pink dots. Interesting. Just like I was saying a moment ago, the pink dots are the daily pivots. So if you get improved relative strength and the market's trading north of pivots, you've got a factual odds helping event to your benefit that suggests that the market is outperforming relative to the S&P 500. And what are people looking for in the investment world? Anything that's going to outperform the market. And so it shows that there's internal market strength. It is not a price-based indicator. It's a percent of value change indicator of that product, in this case, Starbucks, relative to the S&P 500. So combining the right tools together gives us better definition, or at least better structure identification of a market's condition, whether or not we want to be a buyer or a seller, and staying on the, again, right side of the market. On balance volume is a big part of my, and I've got a different tool on TradeStation. We're not going to get into that right now, but I just would point out that if you start to see the market accumulating and starting to trade north of the pivot, and you've got improved relative strength, bright blue bars, you would want to see, you don't want to be the only one seeing that. You want the rest of the world to kind of join in on that trade, and you want to see an improvement in trend of volume conditions. So if the market is going to go up, you don't want to be the only guy long. You want the rest of the world, you want to get in first or ahead of the rest of the guys, and then you want the rest of the guys to get in. And as the market starts to move up, if you don't like the trade, or you start to see other evidence that the trade's weakening its trend structure, the relative strength starts to weaken, you can say, you know what, I'm going to tighten up my stops. I'm going to maybe take half price profit off. I could do a lot of different items and take a portion of a trend move. So that's a couple little ways of which I like to make sure that when we give these little PUG meetings, A, share with you where can you find my indicators, B, what do the indicators do, and then C, how do we use them day to day. And I this is probably one of the best clear-cut examples of how we do that. So let's go over here, and I'm going to get rid of clear drawing because we don't need all these drawings on the charts. And we'll change this back over. You can look at an intraday basis of 4 hour, or better yet, we'll go to 1 hour. And so when we're overlaying multiple time frame analysis, multiple time frames, the longer blue dot right there, you know, if it starts on or about the 1st of September, and up here, it's color-coded even, it's a monthly pivot analysis, right? So you know we have daily, weekly, monthly analysis. And that, I think, is a good outlay, excuse me, of where, or, you know, your different time horizons and where the market, if you want to figure out where the market's going to go, ask yourself, where's it been? And if the market's supposed to be bullish, then it's going to be above its pivot. If it's supposed to be bullish for the month of September, then it should trade north of the monthly pivot. And until it did break out and close greater than that monthly pivot, which occurred on that day right there, we still had a little early warning signs from both the relative strength improving, volume participation, and that, lo and behold, that little PPS buy signal that occurred. So while the market is not easy, and anyone that, and I hope I'm not suggesting the market is easy, I'm suggesting that these tools will help keep a trader more grounded with more factual information. If a market condition is supposed to be bullish and it acts differently, then something's wrong and you need to do something about your trade. If your outlook was bullish and you're seeing a lot of bearish things, you better adapt and change. And that's one of the key components. And that's one of the neat things about the PPS indicator, because while it might give a lot of buy and sell signals, and for that, many of you know we have this thing over here, the algo room. This is in our algo room. I utilize not just pivots, but a lot of these signals that you get here. Red is a connect the dots. This is this morning. This is today's trade action. Red is bad. So it means it went long here. It got reversed out there. It went short there. It got out there. It didn't do anything. And then finally it got a little chopped and chewed. And then at the end of the day, after Jay Powell stopped talking, sayonara. And this is a crude oil. We run these overnight. This is the volume tool. What I really changed pages for was to share with you. This is a volume. It's what says VM indicator. It's a volume indicator. It's a momentum of volume change. It's more advanced than on-balance volume. It also helps to highlight something that's very important called bullish convergence and bearish divergence. Markets that make newer highs and with no volume behind them ain't no bueno, if you could excuse my poor Spanish. If a market is supposed to go up, it better have conforming evidence of stronger volume patterns. Without strong volume, there's no participation. Markets that go up on weak volume are subjected to major reversals. So I definitely want to point out, while I have 3 major tools on Thinkorswim's platform, I might add that, we'll go back. Sorry about that, gang. Oh, it's all good. No harm, no foul. I do not have that one particular volume tool on Thinkorswim. All right. So, but that's neither here nor there. On balance volume is still a definitive good trend, especially for stock traders. Especially for stock traders, you can utilize the PMC relative strength tool. So 2 things. The PPS indicator gives buy and sell momentum indications, and it can be used for scanning purposes to say definitively get how many buy signals generated today, or on an intraday basis. And I want to leave you with this. It's 10 o'clock in the morning. The market opens up at 9:30. If you run a 1-hour scan, listen carefully. This is important. It's 10 o'clock in the morning Eastern. The market opened up at 9:30. It's a half hour into the day. If you open the scan and you run a 1-hour chart, scan 1 hour, it's not telling you what was in a signal. It's telling you in the next 30 minutes at 10:30, at their first hour, if there's a stock trading at a threshold, it's going to alert you and populate that there's a warning that that's going to generate a sell signal. That doesn't mean you act on it. It means that in 30 minutes, you start preparing and saying, hey, 2 things I use that for. 1, definitive buy and sell signals, but 2, to find out if there's a concentration of stocks selling off, giving massive sell signals in a particular sector. And that would be more important than just one single stock generating a sell signal. So if I go over to S&P 500, actually, we're going to go use the Russell 3000. It's a good combination here. We'll go to Russell 3000. We got sell signal. Let's take a look at end of day and go daily real quick. It's right there, and hit the word scan. It's thinking about it. And this is exactly what I'm referencing. At the end of the day, consumer discretionary, whether it was Winnebago, okay, they sell camper vans, Harley Davidsons, you know, their motorcycles. Brunswick sells boats. You've got casino operators, Vegas Sands. You've got Red Rock Resorts, which is the smaller casino where the locals hang out. It's off the strip. You've got Carnival Corp, Norwegian Cruise Line, which I believe yesterday just got an upgrade. It didn't work out so well because today now it's in a PPS sell signal. Royal Caribbean. So we had a lot of, you know, you get the idea that, wait a minute, you've got 3 of the major cruise lines all in a daily sell signal. That's industry-wide. That's not just news to one little company. What's also interesting is that you've got Starbucks, Jack in the Box, Shake Shack, Yum Brands. Those are all restaurants. So you've got fast food chains also getting hit hard today, or at least generating new, fresh daily sell signals. Uber Technology, airlines from Spirit to Delta, the Copas of South America, American Airlines. So you know that we've got and I don't know if that's correct labeled of industrials, but their transportation and the jets and the airlines. But we had more than one name in a space. And that tells you that there's in that space is going to be under trouble or may have followed through relative weakness in the days ahead. Until that starts to change, this is giving you definitive sell signals of major sectors, financials, healthcare. So today we had something like 115 brand new sell signals in the Russell 3000. Many of these, we could take a look at Royal Caribbean, just for selfish reasons, RCL, or we could take NCHL, Norwegian Cruise Lines. Is it NCHL? I think I got dyslexic on that one. No, NCLH. I did get dyslexic. I got double dyslexic. I got reverse dyslexic. So what I'm sharing with you is yesterday the market had, I think it was yesterday, it may have had an upgrade. Maybe could be wrong, but notice what has happened here with the market. And I'm going to change this over to a 60-minute chart. So today it was giving you a projected higher red than the prior day and a lower green from the prior day. That's pretty weird. And the pivot slightly lower neutral. So to me, this is a what I would call a neutral day, biased more to the upside neutral day. The fact that the market came in today and it was supposed to be neutral bullish, but couldn't at any time during the day get back above pivot. If you heard anyone generating a upgrade yesterday, if the market's supposed to be so bullish, it should trade north of the pivot, not close and trade south of its pivot. That's trouble. So if a market's supposed to be bullish, it better trade north of the fuchsia line. You come in the next day, and by God, it can't even get anywhere near its pivot point, which is way up here. That's not a good sign. So Norwegian Cruise Line, not only did it's giving out tomorrow another bearish outlook day. What did the volume do? What's the trend of the volume here? It's weakened. More importantly, if you look at the relative strength of this tool, of this stock, the tool itself was saying since over the trend since last Friday, since this high, the relative performance of the market was underperforming the market. And I mean, you got three things that are non-correlated. PMC has got nothing to do with the stock itself. It's a difference between the percent change of the movement of the stock to the S&P 500. So if it's not improving and it's got an upgrade, then something's wrong, right? Next, the market has a reaction to the upside. You can see the PPS buy signal. How's the volume trend? At this point, is it improving? No, it's still going down. And so again, relative strength is weakened. The volume action is pointing lower, suggesting selling pressure. And then finally, it can't even manage to get above its daily pivot. And so therefore, it opened the door for more relative weakness. Tomorrow, it's got a really bad looking projected price down to around 1381. So it's giving a very negative bias. So, I mean, if it looks like it's got four legs and a tail, it's probably an animal, right? If it barks like a dog, it's probably a dog. In this case, it closed below weekly pivot. Daily pivot's bad. Volume is bad. Relative strength is bad. I'm not a buyer of this stock tomorrow morning. That's for sure. So, Baj Trader wants to know, are these good for stocks? Well, they're good for ETFs and make sure they got some decent volume to it. They're good for Bitcoin. If you wanted to use GBTC, you should be able to use them for GBTC. Same story, different day. Look at the relative performance relative to the S&P 500. I don't know if Bitcoin has enough selective studies to compare to the S&P 500. Once again, PMC is S&P based. Denominator is S&P. So if you take a look at even volume, is volume trend going up? Is it trading north of the pivot? Here's a nice little buy signal. It still gave a sell signal, but it's still north of the pivot on rising volume and improving relative strength. Kind of weird. If you didn't catch this, then by gosh, the first hour open, at least you know not to sell short the market. It's improving in relative strength. It's improving in volume, and the market's trading north. Now, is this is a 1 hour chart, my friend, but this is just GBTC. Is it good for futures? Absolutely. Is it good for gold? Absolutely. Follow through ZS, soybeans. Is it good for beans? By the way, I wanted to give Bonnie a heads up. Based on my recommendation, we should see a weakening structure of soybeans, and we should start to see soybeans weaken. You know, with today's action of the Federal Reserve pointing to higher interest rates, the cost to carry should cost a lot more for soybeans. The dollar itself, the US dollar, is going to be more costly. So our exports, people might not be able to afford as many our product. So right now, South America is in the planting season. We're starting the harvesting season. So our product is like the number one product available on the global market right now, apart from what's in storage. So logically speaking, higher interest rates should not bode well for commodities. Why? It costs more money with higher real rates here in the U.S. A dollar strengthening should cause relative weakness in some of the ag prices, specifically soybeans. We just had a wage report or USDA crop reports last week. I didn't find the report that bullish. Apparently, the market had different intentions. The crop was a little bit lower. Their projections of demand was a little bit higher, but nothing substantial. The market had this big reaction rally right there. If tomorrow we start to see, for the first time, we break down below pivot, if we can get a close below the weekly pivot, I think we're going to start to see that the true colors of the market should start to decline one more time. So that's just my 2 cents. Higher interest rates should not bode well. Higher interest rates should not bode well for the soybean market or our grain or our crop or our export industry. So it's going to slow down exports as well. Why? Well, farmers can't afford to borrow money, and so they have a cash crop. So they're going to probably sell their crops. Who are they going to sell them to if the expense is higher due to the dollar exchange rate? Who are they selling to? They're going to have to lower their prices to initiate, and that's deflationary. So higher rates should have a deflationary effect on the grain complex. We just hope it happens sooner, like the next day or so, rather than later in the next week or so. All right, so that's 2 cents there. And look at the volume trend of soybeans. Does it look like people are buying the breakouts, or does it look like you have subsequent lower lows in volume as you get higher highs? That's a divergence in of itself. So the question is asked, do these indicators work on other markets? And the answer is absolutely. You'd have to be more specific, but they definitely give an outlook with Person's pivots for commodities. They give it for crypto. They give it for anything that moves that has a range. If something has a high, a low, a close, then the indicators should work. If it's a mutual fund, a thinly traded market, not so bueno. Okay. Anyway, I just thought that today's action, I'm glad you asked that. Thank you very much, Bosch Trader. And again, you can compare, as we did today. I said that the PMC is S&P denominator based, right? So you can kind of take a look at the Qs relative to the S&P 500. You know, ironically, looking at an hourly basis, we were doing just fine relative to the S&P 500. Even though the market wasn't going up, it was losing less. It wasn't going down as much in the Qs. The Qs had a relative strength. We're starting on a 60-minute basis outperforming. Volume got kind of squirrely here. So we never really got up. And again, unfortunately, we came close to weekly pivot, but couldn't tap it. And now we've opened the door for, I don't know if we're going to get down to that pivot level way down there by Friday, but it doesn't look promising to be buying a dip in the Qs right now, at least after today's Fed. So you can compare the IWM, the Russell. You can compare the Dow, the diamonds to the S&P 500 using the PMC indicator, and then find out is one relative to the S&P, which is more powerful. A stock, while it's not going up, it was not going down as fast and furious as the S&P 500. That's what this is telling you. That's all that was telling you. So there's, if you're comparing any product, it works best without 100% knowledge of the indicator. It works best for a stock compared to the S&P 500. There's a lot of information regarding the PMC indicator, both on our website, books that I've written, all my books. In fact, Mastering the Stock Market, as well as the last second edition, excuse me, of Candlesticks and Pivot Point, the second edition, got a big, huge chapter all about the PMC indicator. Fabulous stuff. Anyway, with that said, that concludes our time today. I hope Baj Trader, thank you very much. Says he has a clear understanding of how to apply these. Mathematically, it's that's what this is all about. Everything about the person's pivot is math-based, looking at the formula. The PMC is relative strength, comparative analysis, and the PPS indicator as well is an algorithm generated indicator that detects momentum. If I may, I'm going to maximize this sell. I'm not sure I went through Charlie Schwab. What was looking decent about Charlie Schwab, we have a long entry where the green line is. I trailed the stop today. That's what the orange line. I just put that over the charts per our newsletter. Relative to the S&P 500, look, man, it's outperforming. It's bright blue. Volume was iffy. There was no volume. This is a 1 hour chart. And if we take a look at the daily chart, you'll see we have a nice little wedge pattern in here. And what? We have a nice upside movement in volume. The relative strength is improving. And compare that up until today, it was breaking out. We needed to close greater than this overhead resistance line. This is what we were talking about today. And if not, it better stop dead ass on a dime on the weekly pivot. If it doesn't, we're going to want our stop because we want to protect some kind of invested income that we put on the table. I don't like to turn a winner into a loser. I'll give back some, but I don't like to turn a winner into a loser, typically speaking. So we like to trail stops. And some people confuse trailing a stop with taking a loss. No. If you have an idea of getting into a trade and your initial stop is a loss, as the market moves up in your favor, cancel, replace your stop and turn it from a loss to maybe a break even to slightly just above break even, giving the stock room to run or maybe make a change. Other people may also do some other fancier stuff like sell upside calls, but then they're married to the stock. And if you sell upside calls, for example, in a trade like Charles Schwab and collect a buck and it has a $20 risk to the downside, listen, you can keep your covered call strategy. If the market really turns south in a hard way, I would prefer to just be stopped out of the trade because I can always get back in another day. So sometimes, trailing stops is a better plan. Stops, as I always teach, are not for sissies. They are important, but they're important when you have them at logical spots. Do I get stopped out of trades? Absolutely. GM's won, AAL. We had a trade in American Airlines, and I'm saying this in front of clients that are currently subscribers that are in our live trade room. Listen, we got in this trade. We trailed our stop. It stopped us out. This is just the other day. So what I like to do for the trade room community is show where we get in and then where we change our stop from a loss to locking in a little profit. And we got stopped out the other day, yesterday, in fact, and it came back and tested it again. And I was like, maybe, oh boy, we don't want to get into that. And today, more follow through. Look where it was relative to its pivots. It crashed and burned, and it closed less than the pivots and the volume. So I don't know, maybe the market was going to go into a pause. At the very least, if you have a profit, trail your stop, move it up to protect, because if the market's supposed to go up, it should be north of the pivots. And that's part of the secret, just to show you how do I practice what I preach. I use the pivots to help me to determine the market condition. If the market condition is supposed to be bullish and I'm long and I'm in the green and the trade's profitable, and all of a sudden the relative strength starts to weaken, the volume trend doesn't look good, market closes below pivot, at the very least, move your stop up and protect the profit. Don't be stupid. At the most, get the hell out of the trade entirely. And so that's how I put together more times than not our trading plan. So with that said, I thank you all for your time. I hope you found today's PUG meeting insightful, both how to apply Person's tools on Thinkorswim as well as how are we utilizing them in this market event. I use the scan to help look for opportunities. I use the analysis to help me with my entries. And I also like to look at the condition of the market via its strength, using the PMC indicator and its participation of volume trend. Thank you guys very, very much. And we'll see you, for some of you, we'll see you in the live trading room. That concludes our time for today. And this video was recorded, so we'll look to get this posted on the website. Thanks, everybody. I will see you guys on the flip side.